Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Tuesday, and the week is shaping up very volatile once again, just like a lot of 2016. Yesterday, markets were trying to hold in before late day. They caved in. Lots of those support levels, the upper support levels from Friday, hit those air pockets and flashed lower. Reason being because oil broke below 30 again. Then last night, if you looked overseas, you saw the Shanghai down another 6%. Most of Asia all deeply in the red. But, when you then go look at Europe, Europe was like, only off small. And I think it has to do with some of the Iraqi ministers saying that they would be flexible with oil. So oil bounced, so it changed the complexion of the trade. I know a lot of guys are complaining because yesterday, I think, like myself, I got flat saying I want to see if we could buy a pull in for a higher low. So when the futures are down 15 handles, I'm like, okay, this could be a great trade. Down 15 handles to go green ahead of the Fed. But they already did that pre-market, so now we have to be flexible. But what we are seeing is a little bit of a divergence to the weakness in Asia, okay, which I guess I don't know if people are getting used to or just ignoring for now. But anyway, you look at the chart of the FXI, you will see, first things first, what this was when it broke above this 42 is this is what you call a parabolic move. That is a move that happens so fast and so furious, it's a situation to sell, not buy. It was above the 8-day moving average the entire time, and typically, or when it broke this little spot, that was your exit sign. And since then, you had your break lower, and the Asian markets have been below the 200-day for a long time. That means it's very, very broken. And now you go short term to see where the FXI is. At this point, for sentiment reasons, I guess see how it opens today and see, if it could hold this last pivot low or not. This pivot low right here is 28.81. As far as if the Shanghai, last year, in my note, the Redler All Access note, I wrote about how you should be selling the Shanghai into that move to 5,000. That it, had an eerie feeling like Nasdaq 5,000 back in 2000, and we know that that bubble burst and it went all the way down to almost 1,000. In the Shanghai, there were stocks galore that have like PEs of 400, 500, 600. The exchange itself. So and then I don't even think I thought the retail got let in at like 3,000 to 5,000. So they caught the bad end of it. But anyway, it went and closed below 2,800 yesterday, the first time in I think 14 months. So if the Shanghai can't reclaim 2,900 to 3,000 fast, the next micro spot's probably 2,550, then 2,200. So you got to learn from mature markets with markets that are looking to, find their way. And I think that Shanghai has a lot more problems in front of it before it finally does, especially with the currency. And I think that's a big problem too. Are we going to wake up one morning and then you have that devaluation, even though everyone says it won't happen? But let's go to our markets now, because you had the SPX, engulfing move yesterday. You had your first red dog reversal move here on Wednesday, a higher low, and then this follow through that happened on Friday when it cleared this pivot was taken back pretty fast. So today I was thinking, we could open below and maybe do a red dog reversal back above this, but so far that trade is taken away. So 1875 is your pivot for today. We're opening up a little bit. Does it try and come, break below, come back above, or not? So you have 1875, and then you have 1848, and then you have the low. On the resistance side now, you have this 1908-ish area. So we'll see how many, what type of days we have between today and tomorrow into the Fed. If you look at the spider, or the spiders, I'm sorry, we were looking at this to start yesterday where it said, okay, you had a 3-day move. What type of digestion would we have for a day or two heading into the Fed? And this was your pivot yesterday, which was 188.80, and below that was an air pocket. That is why that happened. Okay, so now at this point, first to give you a quick snapshot, this was last year's double bottom low. Here is your quick flash trade through, come back above. Here is today's pivot. It's above it now, not below it because of the futures. That's 187.41. I was hoping for a little bit of a down open to buy, to go green and push up. Now that it's up, could take a little bit of patience because you don't know if it's going to retest the overnight lows or not. So at this particular point, here's your pivot, and then your resistance is probably back around this 189. You could probably go to your 5-minute chart to see, like, if you're like, oh, we were so much lower, I want to, fade a move, into what could be a little bit of an up open. If you look here on resistance-wise, this is where we broke down from late afternoon, somewhere around this 189. So we were lower overnight. Now we're up like 60, 70 cents. Maybe you look for the first trade to be a short versus a 15-minute high to see if we come in. But, I think you have to be a bit careful because a lot of people are probably thinking the same thing, because I think you have shorts trapped overnight and guys not long because of this move thinking we could be buying it in here, and now we're within this bar. So you want to watch to see what's going on. What everyone will be watching is oil. Is oil going to stay above 30? It was below it last night. Now it's back above it. So you look real quickly at the USO. It also has been in a crazy downtrend. Filled this gap. This would have been your pivot to buy back above. That's 854. It's now like at 880. I guess see if it hangs out within this to maybe see higher prices if there's any real truth to the ministers getting flexible, and if you see some people join that same rhetoric. If not, maybe if it were to go back below 30, then you'll see some pressure in the market. XLE led the market lower a little bit yesterday, failed at resistance, which was right around here, pushed above and failed. This is today's pivot right there. It's inside this bar now. Here is your low, 53.10. I think it's up 70, 80 cents. So we'll see if there's anything to do in here. It would have been nice to open lower and do this and give us a good trade versus this support, but that's not the case right now. So nothing we could do about it except for, I guess, be a little bit more patient. On Twitter I was kidding around saying, the high frequency trading and the algo goes all night long. We used to be able to get this kind of trade where you open down 15 handles at 9:30 and then went positive and green by 11. Now all of a sudden these moves are happening overnight because things are trading 24 hours and everyone has to adjust. And if you don't get the setup that you want, you better just take it a little bit slower and not revenge it. So yesterday, one of the reasons we were all so weak, I was like, look at the banks. The banks are gross. You have Bank of America at lows of 2016 right now. Goldman's not too far behind. And the XLF, was already below last Thursday's low. It didn't get to Wednesday's low, but it took out Friday's low real quick, showing relative weakness. Never even got above the 8-day, and now it's right here. Look how far ago it broke below all the moving averages to get you out of these banks, no matter what people said with higher rates. Anyway, this has been an underlying problem that I don't think a lot of people are talking about. You look at Bank of America, it made new lows on the year yesterday while the market was still strong. This too also broke the 200-day and broke everything up here, broke below another pivot there, and now here you go again. So at this point, it's probably up peanuts, but it's still brokenish, well, more than brokenish. Goldman Sachs also, right back to the lows. Goldman Sachs, a lot of guys like me were talking about the head and shoulders pattern that was looking at the bulls straight in the eyes to start the year with the head, the left shoulder, the right shoulder. It broke below the 200-day. That was one signal to get out, and then this pattern triggered right around here at 172. 200, what is this? 220 to about 175. Just say that's 50 points-ish or 40 points-ish even from 175, 40 points below. That takes you down to 130-ish. So, this move is not over yet as far as, the measured move. You do have an area of support coming across here in Goldman right around there, but the measured move of this pattern pretty much takes you all the way to around here, and that would mean, a lot lower prices, in store for the overall markets. Okay, but again, right here, I wouldn't be going nuts and adding considering where it came from because there is a level of support going sideways. But overall, no bounce here in Goldman, and on a micro level still looks, not too great. So I would write down this pivot, which is 150, 112. If it happens to break below, come back above, maybe that would help the markets a little bit. The Russell's also been a problem. It led the markets lower. It broke Friday's low yesterday very quickly. Not much to say here, but if the market's going to rally, it needs some help of some sectors, and this one has been very weak. This took out Friday's low, which was right here, well before the spiders did, and I was hoping to see maybe a gap down move to buy, but that's not the case. So right now it's probably up a little bit. So see if they take it red, and then see how it deals with 98.85, which is yesterday's low, which is your pivot. Okay, and we'll see if it can hang above this and still build this lower pivot or just continue lower. The bios got rejected at 290. I'm sorry. I tried that for a trade also. It didn't really work well. Maybe it tries again. Pushed through, couldn't hold it. So I was in a little bit added, and then I got stopped out. But really, this is more of your level here. If you're a little looser, and this 280-ish zone, and maybe if we do get another rally attempt, we'll see a little bit more power, going through 290. But if not, just take some care, know your risk. This trades with ascending channels, and this was the last time you had your shortable sell, and then it broke below support here, giving you some follow through besides the double bottom low that didn't serve as much downside. But ascending channels is what the bios love to do. They love to follow trends until trends change, and it changed here, changed there, and now we're seeing what's happening in this lower pivot. So you got to figure out, maybe if you see power coming and you see it take out 290, which I don't know if it happens, then maybe it'll tell us that this market's not done trying to be cute to the long side, and you see a move on the spiders back above 190 at some point. But I don't think that's really going to happen unless all of a sudden oil really goes back to 31, 32 today. It might wait till the Fed tomorrow to see what they say and how they don't act anymore. As far as stocks are concerned, high beta tried to be strong. We talked about day 4 or day 3 of an up move. You always have to be a bit careful, and a lot of these things were up all day and then just failed in the end of the day. Not much really to do, here. Google, we talked about bookend red dog reversals. You had a nice red dog reversal to buy here, and then some might have gotten out into this, where this is how it works. It works both ways. So this is actually a really good example. I might even use it for one of my next webinars. Here's your buy side one, right? It traded below 701, went as low as 687. So that's about 14 points of risk if you did it. Just want to reclaim the pivot, and it gave you close of about 17 points. But then if you said I'm going to keep some, you had another move to the upside and then another move to the upside, and then once it pushed through 748 and came back below it, that was your sell signal. First time you saw it from this low here, so that really was a 48-point trade if you just swung it. And if you said I'm going to look for a short now, you got short at 748 with a stop as high as 752, so that was a $4 risk, and went down 15 points. So 15 points for a $4 risk, and then maybe you kept the third. It might be up a little bit today with the futures. If it were to go red and go below this, maybe you get a little bit more of a move. But that's how you could use the red dog reversal on both sides of it, with stops and calculated. Amazon, it had a 4-day move, a little bit of a doji. Again, I saw some articles about them saying Prime might be at a point where it's saturated. This had a nice little reversal here, and then reversal into resistance there, and again, not too compelling. Facebook is earnings tomorrow morning. I don't know. I've been seeing some people talk about how this could be a potential head and shoulders top into the earnings report, and I don't quite see it yet, but this would be the left shoulder, this would be the head, and then depending on what goes on here, this could be the building of a right shoulder. And if that's the case, that's not going to be good for the overall market. I know a lot of people have made a hell of a lot of money. I've been riding this trend, talking about this ever since the cup and handle move here. Remember this cup and handle pattern? I went with Kramer when me and Kramer used to do a lot of stuff together. Not anymore. We talked about the cup and handle pattern and how it can get back to the IPO high, which was right here, and then from that earnings report, look at that trend. So from here to up here, there's a little bit of meat on the bone if it wants to come down. So I don't, until this breaks with authority, until it breaks and closes below 88, it's hard to tell. But overall, on a macro basis, if you've been holding this for a long time, I would take a little bit of care. And typically it's been gapping up after earnings. Maybe this time it might not. So we'll see what happens. But overall, on a micro level here, you look at Facebook and you'll see that you had 4 days up. From here, and then you had a reversal. So maybe today it's up 50 cents. Maybe you try and fade it a little bit. But again, earnings are tomorrow, so you don't know what people want to do here. So just we'll watch that, and we'll go over it in the recap today. Apple is after the close, and this too has been pretty bearish. I think sentiment is as gloomy as I've seen around Apple, but I guess they have a reason to be. I think they're looking for 75 million iPhones this quarter, and everyone's been ratcheting it down. I think anything around 73 to 75, it'll be hard for it to sell off because it's the move has been to the downside. But anything below a 70, I think they're going to have an easy way down. 50 million units is the March quarter, but I think people are starting to discount that and look for the iPhone 7, like Gene Munster said. So I have no conviction going into it. I usually have some kind of option strategy, but I'm not. I'm just going to probably trade it afterwards if I even do that, or just wait till tomorrow. You look at the chart of Apple, and you'll see, you have what I would map out as if it just say it came out with 75 million iPhones right on the nose. The first probably move would be to this 105, because that could be priced in. If they had more than that, if they come out with like 80, I would think maybe this can get back up to 109. If it's like 71, 72, chances are, I don't know, you see a move closer to 96, and if it's below 70, you might even see something back down to this 92. So I would do like, resistance 1, resistance 2, and then this obviously, where it broke down from would be major resistance, and then this would be support 1, support 2, and then below this is a lot lower. So I'll be on the radio probably during that report and trying to figure it out on the VTF. And then you have the metals have been inching higher. There hasn't been a lot of power, but some things that start slow get faster. And last time I showed you guys the GLDs was right around here, okay, or right around here-ish, that it was acting well. And as a joke, I was like, I think the next move we see is 105 versus sub 100, and we got it, whatever. And now we're back at this 2016 high, which it's nudging above. So I think the gold bugs would really like to see the 200-day taken out with authority, and that's a hell of a lot higher at 108. So if you've been in this, it's been trending above the 21-day a little bit, besides this day. It's looking better. And the TLTs, we discussed it also. You had your topping tail. In my note, we talked about adding to your short if it got below this topping tail low, and you had a nice trade that day into some downside follow through, and then we sent out the tweet saying if you shorted it during this day or added, maybe a spot to cover and maybe even nibble back. And now it's kind of caught in the middle, and we'll see maybe tomorrow what kind of wedge we have leading into the Fed, and then it could give us clues on the next direction. So all in all, the bulls made a stand last week with the big reversal, lots of bottom tails, lots of things to perhaps build on. You had your 3-day move. Yesterday was a controlled pullback. It got a little intense towards the end of the day because of oil, but now oil's back up. China's down a lot, but the market doesn't seem to care today. Why is that? Maybe because they're waiting for the Fed tomorrow, or Apple or Facebook. At this point, still the jury is somewhat out whether or not, that 1906 in the S&P is the high of the next 2 to 4 weeks. The same way the jury is out that 1812 is the low for the next 2 to 4 weeks. I think that's a good way to phrase it. So short term, it's hard to tell which way we might go first. Short term, if we close back above 189 in the spiders, then through the Fed, and we might trigger above 190, and if oil stays above 30, and then you get that move towards 1950ish or above. And if we close below 1840, 1850, that 1812 is going to come quick. So I think have a plan on which way we close so you can lean which way you want to go. But I would say overall, we're not talking about 2 to 4 weeks, talking about the next 3 to 6 months. I would say that 1812 is not the low of 2016. So if you reduced risk and went to cash, like I talked about in the beginning of the year, which I did with my wife's 401k, I'm not looking to put that back on until we see something in the 17s. And if we don't, then I'll just keep it there and I'll figure out what's next down the road. It's in a RIDEX 3% guaranteed fund, so we'll wait. Anyway, so I'm just trying to line up the time frames for you, and I'm also trying to line up, if you trade for alpha and cash flow, what you could be thinking today into tomorrow, and how to make money, and how to continue to put a month together so you can get a paycheck, because that's what we do here as traders. We put months together to try and get paychecks and move forward. Have a good day.